Hello, everybody, and welcome to the Cyclical Investors Club YouTube channel. My name's Corey Kramer. Today, we're going to be taking a look at Salesforce stock, ticker CRM. This one came in a while back as a request down in the comments of one of my other videos. If you have a request, put it down in the comments. I'll get the ticker on the chalkboard behind me. Eventually, I'll make a video. I was going to make this video a little bit earlier, but I saw that they were going to report earnings, and I figured I'd wait till after that. It's also a little bit tricky to kind of describe my my thinking behind this one because I recently took a small position in it. So sometimes when I have those kind of unusual buys of mine, it just makes it a little harder to make videos and kind of explain what I'm doing. So I kind of delayed a little bit for that, but it's coming up today. As always, this is not individual investing advice, just how I analyze stocks. So Salesforce reported earnings. They seem pretty good to me. I think the stock is down a little bit more today than what it was yet last night when this is the closing price. They announced an acquisition. I think it was like an $8 billion acquisition. Let's see. So not super big when you consider that they're a $264 billion company. I don't really have any thoughts on that. Usually I just look at the size. If they start making like $40 billion acquisitions, then I would be a little bit more critical of it. The smaller ones I don't really pay too much attention to. So let's start by looking at the historical earnings here. The forward guidance, this is the midpoint here now. I wanted to wait for that to update before I made this video. So $11.30 is what they're looking for this year. Before it was lower. I think 11.14 is what I had yesterday when I went and kind of updated everything. But when we look at the historical earnings growth for Salesforce, which is represented by this dark green area here, this probably came from tax cuts. So kind of a one-time deal, but we'll go back to like 2018. Obviously much tinier company back here before the Great Recession. In terms of earnings, they had some fluctuations. And then other than that, like 2014 was the only year in where earnings per share declined. It only declined 14%. So growth has basically dominated any sort of cyclicality that the business might have. This was one of the stocks when I was doing research for my fast growth strategy. It fell a lot here, I think. Yeah, like 70%. One of the things I was trying to do was capture businesses like Salesforce kind of early on in their growth phase. And it did that. My strategy did trigger a buyback here. Now I wasn't using it. This is just back testing. But it is kind of worth thinking about all the investors that have bought this stock that weren't during this little peak here or quite recently are doing really well. If you're one of the really smart people that bought back then and held it, you have like over a 30 bagger. So you're doing very well. And really, honestly, anybody that's, even if you kind of picked it up here, again, really solid return, 16% CAGR. So a lot of what should be pretty happy long-term investors here that probably aren't in a hurry to run out and sell the stock. Now it's a more mature business. Obviously, it's a $200 billion business. So we shouldn't expect the kind of growth that they've had in the past. But my thinking on it was that, well, let's look at what future earnings growth is supposed to be here. So analysts are now looking at 11% earnings growth this year, 12% next year, 14% the year after that. Now, historically, it's been much higher than that, like 30% during this time period, probably even more if I actually take out the future guidance. So 30% growth is what we've seen. Again, we have a tax cut year. We have that's going to be one time basically. And then we have COVID stimulus. So some boost from that, but you could make the case that it's easily been growing at 20% a year. We could go back a little farther, see 40s, right? For, more than a decade now. So the growth has definitely been there. The reason I bring that up is usually I use historical earnings growth as kind of my guide for what I'm going to project toward the future. But this is one of those cases where clearly the business is really big now. It's not going to be able to grow at like 30% a year for the next 10 years, or however many years. So I kind of look and see, okay, what are analysts thinking? What seems reasonable to me? And this is several months ago, I settled on like a 12% earnings growth rate, which pays some respect to what they've been able to do in the past, but it also is realistic, I think, about limitations on future growth once you reach like a certain size. And that might end up being optimistic. But if you consider maybe we get like 3% inflation or 4% inflation, now they're only growing at like 8% or 9% real. That's not super duper fast. They might be able to do that. I think it's reasonable to assume they at least have as good a chance to do that as other companies do of matching their historical earnings growth. So that earnings growth number's important for my basic valuation. However, I didn't actually buy the stock. I just want to make sure my spreadsheet's going to load here. Yeah. Based on that, what I did, I just bought this one during the April decline, after the tariff announcements and stuff. It had a pretty good, or bad if you're a shareholder, but a significant decline off this peak. What's that? December 6th. So not too long after the election. It probably fell like 35% off of its high in 5 months or something like that. So a big sell-off. And really what I based my small purchase on was how the stock behaved during this 2022 decline, right? It fell a solid 60%. Now I didn't base it on how far it had fallen. I based it on kind of relative to peak earnings. What did it kind of trough out here? Which I had actually, this is kind of, Fastgraphs does weekly numbers. I had it roughly estimated at about a 22 PE ratio. So my thought was, and if you would have bought down here, I mean, even right now, because the earnings grew quite fast, you would have gotten over 100% return right now, right? So I don't really necessarily expect that going into the future. Like a 2-year, I mean, obviously they way outperformed more than expected. But they could do that again in the future somehow. So we don't really know, but they managed to find a way. They seem to manage to find a way to keep growing. And so I was kind of given then the benefit of the doubt, and I figured it was at least a fair price to pay. And then, if they outperform, maybe I could do a little bit better. Another factor that came into it for me was I just had to have a lot of cash relative to like most people. I think at the beginning, now we bought several stocks in April during this sell-off, and this was one of them. But I think I went in over 40% cash, so and managed to get that down into the 30% somewhere. And it was partially by kind of picking up stocks. Most of them actually were very much more cheap than this, but knowing I had so much cash, you have to say, okay, what are the chances Salesforce can grow 12% a year compared to the 4% that I'm earning on cash? And it kind of balanced in favor of Salesforce taking a small position. So now in terms of the normal valuation, so that kind of recession, not even recession, but 2022 bear market decline, right? Valuation. That comes in at about $248.60 as the buy price. I think I'm up like 6 or 7% in the stock right now. So it hasn't performed like super well or anything. But it seemed like a decent dip to add a little bit there, based on the most recent recession-like decline, I guess is what I can say in 2022. But the basic valuation, that really didn't have anything to do with like earnings growth. That had to do with peak earnings during the 2022 and also the 2020 decline. They were kind of somewhat similar, but really based on that 2022 decline. Now, the basic valuation, if you assume 12% earnings growth, which is what I was talking about before, when you work out the numbers on that using my methods, it comes out to an expected 10-year earnings CAGR. So if you just bought the business you took the earnings and the earnings growth, if they grow at 12% over time, over 10 years, the earnings CAGR is about when I bought it was about 6.5%. So I consider that fair value. So on a basic earnings basis, and if you think about it, like a 12 PE trading, or sorry, a 12% earnings growth trading at a 22 PE, that's under a PEG ratio of 2, somewhere in between 1.5 and 2. Not super great deal, right? But fair, and relative to the market, which is the return, the 10-year earnings CAGR for that's closer to like 5%, 5.25, 5.3%. It seemed a little bit better than the average S&P 500 stock as well, just based on earnings and earnings growth. As long as they can hit something close to that 12% number, at least seemed like a fair value. So it seemed fairly value based on earnings. It seemed like it could do well if it's a 2022 like dip, and then they can exceed for a year or so when it comes to earnings growth. And so for that, I took like a small position in it, and we'll see what happens. I think if I didn't have very much cash, I would have been more patient, just waited for other deals to come up. I probably paid more for this than any stock in April, honestly, when I think about what I bought. A lot of those stocks are up 20, 30, 40, 50% now in just 2 months or something. And that's what you can do when kind of you're patient and you wait for the really good buy prices. But not, it's good to have. I don't have a lot of exposure to big tech, to the higher market cap names in the index and the big indexes. So that was my kind of thought process there. So right now I think it's fairly valued, and whether one is thinking about taking a position if it dips a little bit more here really depends on what your goals are, what your portfolio. I mean, sometimes things are such good deals, I feel like they're good enough for anybody. So if you go back and look at any of the April buy videos I had, Microchip Technology, Micron, AMD, Applied Materials hit its buy price, Alphabet. So those are all ones on public on the channel that I made videos about. So those are ones that are going to be good enough for pretty much everybody. This is one where if you have extra cash, if you don't have a lot of tech exposure, if you don't have any other really exposure at all to Salesforce, like in an index fund or anything, which I don't, and you're positioned pretty strongly for a recession, this is kind of one that could do well if it's just a mild, like we don't have a recession, we just have a mild downturn or something like that. So those are kind of my thoughts on Salesforce. I don't have specific business thoughts. Like I said, I usually use history as a guide. I think we know that they've been managed well the past 20 years, and you don't get 30 and 40 bagger return over 20 years if you're not doing something right. It's really just a question on how much they can grow in the future. So, it's a bet on management being able to navigate whatever comes. And I don't think, with AI and everything, we don't really know what's going to be coming in the next few years. So you kind of have to put faith in the people that have been able to do it before, that hopefully they can make the adjustments and do it again. And then sometimes you get lucky and then they really strike something something great in the process. I never count on that, but it's a quality business, and I don't feel like the risk is super big if you pay fair value for it. So that is my thoughts on Salesforce. Thanks for watching, everybody. And if you found this useful, hit the like and subscribe button. If you have a request, let me know what it is. I'll get it on the chalkboard, make a video, and I'll see everybody later.